How you doing, guys? This is Ryan. Welcome back to the channel. Today we're doing a very special collaboration video with my good friend Citizen of the Year. I'm going to have his channel linked in the description below, and I'm also going to be featured on his channel, and these videos will be released on the same time on the same day. So make sure to go check out both videos, like, subscribe, comment, and let us know what you think. My video is going to be about the cheapest way to become a real estate investor, and on this channel we are featuring, is the stock 3M, the company, a good purchase? And what you'll see from Citizen of the Year, he's really great at analyzing stocks. He has a portfolio on his channel where he's actually beating the S&P 500, which if you don't know, about 90% of fund managers don't beat the S&P 500. My friend over here does it. You hear my son running around. We're just hanging out, getting ready for a hurricane over here, Hurricane Dorian. But yeah, 90% of fund managers don't beat the S&P 500. And Citizen of the Year, he's actually an accountant, and I really appreciate that kind of professional take on analyzing companies' financials. I've actually had interest in the stock 3M. I love the company. I'm in the industrial business. We use a lot of their products. Amazing, amazing company. And they've had a really rough go. The stock has performed actually very bad over the last year or so, a couple of years. So I want to know, is this the time to get in, or is this a falling knife? So without going too far into detail, let's introduce our good friend Citizen of the Year and walk us through the stock of 3M. Let's get it.
Hey guys, Citizen of the Year here. 3M stock has been on a downward spiral since it announced a bad earnings report in April. That call had numerous segments miss revenue targets, and they also announced that 2,000 jobs would be slashed. It also cut its full-year outlook. Investors responded by a massive sell-off, resulting in the largest single-day drop for 3M in 31 years, when it fell 13% and lost $16 billion in market cap. Now, 3M is a multi-billion-dollar revenue-producing giant around since 1902. Does it really deserve the disrespect it's been getting? Is this stock secretly a buy, or is it indeed a falling knife? Now, unlike other companies, 3M doesn't just produce one particular good or service. Instead, it is a conglomerate company that specializes in diversified technology into 5 different segments. They are industrial, safety and graphics, healthcare, electronics and energy, and consumer. 3M is involved in all of the steps of its products, from product development, manufacturing, and marketing. Now, you might think a company over a century old like 3M is a boring company that does not have any innovation. But boy, would you be wrong. Research and product development costs have been nearly $2 billion each year since 2016. 3M is constantly trying to develop new products and make its existing products better. In fact, it has over 118,000 different patents, and they are growing. That basically means if another company tries to copy its products, 3M can sue them, giving them a significant edge over their competitors. 3M also spends billions of dollars each year acquiring other companies and gaining even more products for their portfolio. This gets us into the first economic moat for 3M, which is its products. 3M sells over 60,000 different products. While other companies may depend heavily on just one product for most of their sales, such as a pharmaceuticals company with one drug, remember each of the different segments I mentioned before? You could further break that down into 25 different segments with products, each being in a wide array of industries. People will use these products no matter how we are doing in the economic cycle. Are we going to stop using Post-it notes or tape when the economy takes a tumble? Of course not. 3M has a diverse group of products, all among various industries, that it doesn't need to worry as much about lagging sales in one particular area, unlike other companies. However, that doesn't necessarily mean sales as a whole haven't been lagging. 3M experienced declining sales in 2015 and 2016, only to see them come roaring back in 2017, and then come crashing right back down. The 2 segments you would expect the least amount of volatility from, consumer and healthcare, have been significantly underperforming management's expectations. How will 3M fare when we hit a recession and consumers spend even less money on goods? A positive for us investors about a stock falling off a cliff is that it's now more reasonably priced. Just look at how 3M fares now with its competitors. You will see these are problems that aren't just unique to 3M, but as the industry as a whole. The second largest economy in the world, China, has a slowdown this year due to a trade war with the largest economy in the world, the United States. So of course 3M is going to be down because this is where a considerable amount of their sales happen. It's between these two countries. Asia Pacific is where 3M gets about a third of its revenue, as China is a key leader in manufacturing. In this graph, you can see 3M's revenue has declined every quarter year over year since the trade war has escalated. The total amount of Chinese imports has declined, almost mirroring how the change in 3M sales in the Asia Pacific market have done. If these trade war talks ever finally get resolved, I expect this stock to shoot back up and finally have better sales numbers once these trade wars are over. In fiscal year 2019, 3M expects to generate as much as $5.6 billion in free cash flow, which is significantly higher than in 2018. 3M has also been buying back shares like crazy. Their board of directors approved a $10 billion share repurchase program. As long as 3M continues to generate healthy amounts of free cash flow, I don't see the chances of them slashing their dividend happening anytime soon. 3M also has a very healthy balance sheet with a current ratio of 1.93, and it also has a strong credit rating. Speaking of dividends, this is the part where 3M really shines. 3M has paid dividends to its shareholders without interruption for more than 100 years, and it's also increased the annual dividend for 60 consecutive years. Only 26 companies of the thousands that have existed in the past 60 years can say this. This makes 3M a true dividend king. Even better, with its most recent dip, 3M trades at around a 3.58% dividend yield compared to the conglomerate average of 1.49%. And with only 56% of its earnings going to shareholders, expect an increased amount of dividends in the future. If you had invested $10,000 into 3M stock 10 years ago, your investment would be worth almost $29,000 today, meaning you would have tripled your money just for holding on to 3M. Let's conclude with a quick summary. 3M has experienced lackluster sales in recent years, been hit hard with trade wars, has had to cut its guidance multiple times and cut jobs. However, some pros are it makes great products, has many key patent protections on its products, and has a great history of paying and increasing dividends, as well as returning value to its investors. Even though 3M is trading at a nice discount, many analysts still think the stock will sink even lower. One channel that won't ever sink though is Ryan's, so first be sure to subscribe to his channel, then head to mine to check out my full Robinhood portfolio and more animated stock analysis videos. Let us know in the comments what you think of 3M.
So now you guys know exactly why I was talking up this channel so highly, because of analysis like that. And yes, many analysts are predicting the stock to go lower, but I am starting to average in now. I think this trade war saga is creating possible opportunity. Of course, there is risk this could happen forever, but I think 3M, even if it does happen forever, will find ways to diversify their business outside of China. I know they do a third of their revenue over there. Make sure you guys have subscribed here and head on over to Citizen of the Year channel to watch my take on the best way to become a real estate investor and the cheapest way to do it, and overall just learn some useful information on buying real estate. As always, guys, thank you so much for watching. You can also follow me on Instagram. I'll post my handle right here. I post there pretty much daily, and on YouTube here I post at least one video. A lot of weeks I'm getting 2 videos up every single week. Stay tuned for my next video. I'll actually show you, I went test driving for some Teslas because I am in the market, very serious, why I want to buy them, why I think it's a good financial move to buy them. So stay tuned for that, and as always, I'll see you in my next one.